So hello friends, how are you doing? Now we're going to see a receivable management. Actually, uh, one of the current assets to be financed is receivables. We have in current assets we have two three major current assets. One is stock and is receivable management. Actually, receivable management it is created out of financing, out of giving sales on a credit basis to your customers. So credit sales will create receivables in your books. Till he pays, it will be finding in your books of accounts, receivables, from whom you have to receive. Your customers list will come there. Then you will be monitoring very closely. So receivables is a major financing activity because credit sales will improve your sales and profit. No, sir, I will not do. I will do only cash and carry. I will not do any cash business, and I don't think your business will expand, and you cannot improve your clientele basis, and your profits will not be there. You will not be entering into new areas where you want to penetrate, etc. So naturally, credit is part of your business, and you have to extend credit sales in order to improve your sales and profitability. Even in banks, we have been giving loans to them. A lot of loans we are giving. Even if you give 10 loans and 8 loans coming regularly and 2 loans is not coming properly, but still the 2 accounts do not flop, still you stand to gain, still you stand to make a profit because of those 8 performing accounts. You understand what I'm saying? So likewise, there will be some defaulters will be there, but all will not be all the time defaulting. There will be some. So selection of customers is very important. That is we will talk next time, in the later chapter of it. But thing is, receivables is very important. This is an important current asset. This will not only that money will not be blocked in this receivables because instead of giving a cash, you are giving a credit, and they will give. Let us say they will give after 3 months. The money will be blocked in that 3 months, but somebody will be financing those receivables during the 3 months period. That's called the financing current assets. So if you go to bank with a list of your debtors, it was you normally 6 months below, and they will definitely grant you loan provided they are all good book debts, good debtors, and they will finance those things, and your money will not be deferred. Your business will go on continually, and your scope of expanding the business is very great because you are financing receivables. And some of the customers, they don't even come and ask for a cash. They will cash deal. They will just order them by phone, and you have to give them also, and you know their reputation, you know their names, and they will give. Just if you just call the phone by phone, they will come and pay the amount. That's all. So credit sales is very important. Don't say try to shut your doors and say I will not do any cash credit sales. I will do only cash. No, 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 no. We will not. You cannot expand your business. Credit sales is integral part of your business, and you need to finance. Credit sales is, as I told you, even if the 2 accounts become defunct, and even if 2 accounts become defaulters, still you stand to gain. Still you stand to profit because bank. We have seen it. We have seen bank. Some of the accounts have failed miserably. Still, we are able to make profits because of those performing accounts, because of those borrowers who are sincere borrowers who regularly come and pay. We do business. We earn profits because of this only. So don't try to shut the doors and say I will not do any credit sales. I will do only cash sales. There are some books in there's shops you see cash and carry business. It is not possible. I'm telling you. If you want to expand, if you want to expand your business, naturally credit is part of your business. So you will try to expand it and you will try to do it. So then try to this trade debtors is very important. We call trade debtors, we call debtors, we call receivables, whatever you call name. This is your credit sales. It denotes credit sales, which are where the customers are given credit sales and they asked to pay at a later date. Okay, understood this? So very important. So don't try to say that I will not do any credit sales. It's important because you want to expand the business. You have to do it. You have to do credit sales. You have to get to the customers. The clientele base can be expanded, and you can go on doing this. So there's nothing, 100%. But one thing is, your selection is very important. You have to start to whom you have to give, and other things we'll see later on. But thing is, this is investment trade. This is only investment trade. It is an investment. So money is blocked in that. Money is blocked in that. Your capital is blocked in that. Until such time you cannot till you can pays the money, you cannot afford to stop your machine. You can't afford to stop sales. You cannot say no to your customer because I have given credit to so and so, and he has to come and pay it. After that he comes, I'll buy the raw material, I make the production, I'll give it to you. Nobody will come to you. So this is a continuous cycle. So till such time, these receivables will be financed by somebody else, by the bank or by you or by your friends and relatives, but it carries a cost. Got the point? It carries a cost. Nothing is free. As I told you, I've been telling you business, nothing is free. So it carries a cost, and naturally you have to finance it by going to the bank or by your friends or by other lenders who can finance these things. So it creates by creating a charge on the receivables, they will give a money to you. So that it involves some cost, though it carries a benefit, though it improves your sales, though it improves your profitability, it carries some cost. What the cost? Cost of finance receivables. I already told you, your capital is blocked in that. Your capital is blocked. About 2 lakhs is you are given credit sales to your 2 lakhs customer, 2 lakhs amount is coming to 2 lakhs. 2 lakhs will be coming after 3 months. Till such time, the 2 lakhs has to be financed by somebody else. You go to bank, they will, based on this, they will give financing receivables. Your friends will give financing. Okay, this is financing. This is financing current assets. Financing current assets. Major two current assets are there, but one is called stock, one is called receivable. That we are talking on the important subjects, receivables, very important. So naturally, from the business point of view, from profit point of view, and you have to do receivables, you have to give the credit sales, and the cost of finance receivables is naturally cost involved because somebody has to fund those money blocked in that, and it comes at a cost. So there's a cost. You have to pay interest to the bank. You have to pay interest to your lenders. You have to pay interest to your friends and relatives. So it's a cost. So it costs some caddies. Okay, still administrative cost. So you have to reminder. You have to send a reminder to him. You have to ask him to pay it in time before the due date. You have to remind him, and somebody has to, some clerk has to be put. Somebody has to put in the job and to take care of this list, etc. And so they used to prepare the list. How many things are pending. So some of the business people are asking daily the list. Some business people asking the morning moment he comes, he must know the list. This will be placed before his table. He will scrutinize why this is pending, why he has not paid, why this is a huge amount. You should. So there you can follow up very carefully, and also not only that, they will also by acute follow up, and they can prevent frauds. Suppose the customer, your man is going there and collecting money and putting in the pocket, then it's finished. Then why is it's no longer come in the books, but finally you lose the money. So and it costs a lot of costs is involved. So you have to give administrative costs is very important. So you will have to follow it up. You have to send a reminder, etc. All the things very important. So naturally you have to do it. Then the cost of collections. You have somebody in a bank who is going to the villages. You are going to the town. You are spending money, and we are sometimes we are employing recovery agents also. Likewise, also when you're going in the customer collection, they have to go and stay there. You have to pay him better, etc. So everything is involved a cost. So nothing is free. So cost of collection is very important. So you have to give you have to incur the cost. So it's very important. Then again, another cost is very important. Bad debts. Bad debts. Naturally, some of the accounts will not come back. So it may not be willful default, but sometimes the situation is so bad. Suddenly you will incur some losses, and you will not be able to pay some bad debts. So the bad debts has to be absorbed in a profit loss account. Bad debts is to be absorbed in a profit loss account. So these are the cost of maintaining receivables. So receivables involves a cost. Though it involves a cost, still there are benefits are there. Okay, that we will discuss later on. So what the benefit? You will improve your sales, you will improve your profits. So now it is between a trade-off in the sense, if we take it in a financial parlance, trade-off between benefit and cost. Okay, so this we will discuss later on. So scope of receivable management, what is that? You have to maintain or determining credit policy. Which credit policy? How many terms, how many months you can going to give. You have to tell your policy very clearly. You have to put it in writing also. Some of the big customers, you have to tell him, it is signed by him. This is our policy. This is our due date. This is the credit period allowed. This is the etc. like that. So you have to give a credit policy. Credit policy plus some lenient policy is there. Lenient policy is there. So liberal policy will take 3 months, 6 months. I like that. So without taking any advance payment from him. Okay, without taking any advance from him, just give him 6 months time. So sales will improve. People will come and buy it from you because they will have to pay after some time, 6 months. They will not pay any upfront amount. You not pay any advance. You don't pay any margin, etc. And they will take the money go. And the lenient is there. Sales will improve, but bad debts also will improve. Please understand this. So you have to be very careful to whom you have to give the lenient credit terms, to whom you can tighten it, etc. It's very important. So try to understand this. Like tight credit terms will be there, in which case sales will be reduced, but bad debts will also be reduced. Bad debts will also be reduced. So there are two things. So you have to, in between, you have to take a stand. It's very important. So determine credit policy, lenient policy, sales will go up, but bad debts also will go up. Tight policy, sales will come down, and bad debts also will come down because you're not going to be very liberal. So like that, you have to decide. So how much you have to give, go to give. Then determine credit terms. Credit terms, what are the credit terms? You have to say what is the credit period you are going to give, 3 months or 2 months. So according to the risk categorization, according to the risk category, you can give the period. Supposing you see, I'm getting frequently email, buy loans from me, buy loans from me. HDFC is frequently is calling me. ICICI is frequently calling me, say, we are giving personal loans. Why? Because they know my credit score is good. I repay my, they're coming, calling me, but I'm not, of course, I'm not taking those loans. Why I'm saying is, why they say after me? Because the money will be safe with me. Even if it takes 6 months time, even if it take 4 years, they'll give me all the credit terms because they know that they assess me as a good, they're good borrower. You understand what I'm saying? So like that you have to take. So credit terms, credit period, what is that? Cash discount. Suppose it's 2/10. What was it? Let us say 2/10. If you say put 2/10, it means if you pay within 10 days, you will have a discount of 2%. Okay, fine. Or you have to pay 30 days. 2/10 actually, if you pay within 10 days, so your discount of 2. Got the point? So it's very important. So like that, determine credit terms. So period of cash discount, what is this? Like I told you, 210. If it is 10 days, it is 20 days, 2%. Or is 30, net 30. Otherwise, you have to pay full amount on 30th day, 30th day, like that. Then again, credit terms, like the fixing credit standard. So credit standard, what who customers, you see, who is the credit standard, to whom you have to give, to whom you should not give, where you can give, etc. All the things you have to decide and you have to finalize. So determine credit terms. So try to understand, try to get the credit terms and put it in the policy, black and white. Tell them clearly this is the terms and conditions which you are going to implement. If in case you avail credit, only you take the credit sales. Okay. So now you can give a cash discount, you can give period of cash discount, you can give fixing credit standard. Fixing credit standard means what is the, suppose you say the income, this is the income is this much, it says this fellow is a good borrower, good customer. If income is below this, is moderate. If the income below, annual income below falls this, and he cannot be given any credit sales. Like that, you can have the credit standard. So depending on your customers in the locality, depending on your customers and their income, their profession, you must be knowing your customers now. That's why I'm telling market study is very important. You must know your customers. You are going to operate in a local area. So small business, I'm telling you, you go to open a local area, you know who is the business, how many people are earning in the house. Okay, how many people are earning in the house, what is their income, etc. Everything you should get to know. Then you can give a credit terms. Okay, take 3 months, take 6 months, take 1 year, take 3 years, take fix some EMI also like that. So you take go to now you are buying a huge article here. Some lenders say 5,000, 10,000. Citibank or now Axis Bank, they are giving EMI. You want to convert it to EMI? They are asking. They are asking whether you want to convert to EMI. Suppose you purchase an article from 10,000 rupees Mintra, you argue on Flipkart, they are giving a EMI. You take it as EMI, they say. See, because they are going to stand, because they have confidence in you that you will pay in EMI. At the same time, they will get you some interest also. What I'm saying, you understand what I'm saying? So Flipkart from Mintra, they are giving EMI also. Citibank, Axis Bank is giving a credit. Moment you purchase by a credit card, huge amount, automatically there will be next day EMI will be coming there. So can you convert it to EMI? Because they know me. Okay, so like that you try to understand this. So you try to fix a customer depending upon their net worth, repaying capacity, income, name in the society, and all those things. So small business, especially small business people, entrepreneurs, you have to be very, very careful. in selecting customers. Then again, evaluating credit applicants. So it is very important. So you now a lot of our tools are available. Go to CIBIL, you will find out. Go to CIBIL, you will find out what is the credit score. So they had a benchmark. If it's a 750, etc. Novo is a good, like that they have fixed a benchmark. You can go and be confident in that also. Like not only that, you will have the market inquiry. Market report. What is the market report of the customers? How many people are working there? Is there any problem in the house? Is there any problem in the customers? Is there a problem in their business? So like that. So you have to find out about credit applicant. Applicant you can't blindly give unless you know him thoroughly, unless you verify the market report. Either you put it, you ask him about his whereabouts in the market, what is the report says, what the people say about him, and what the company, what the suppose you are saying selling to a customer, a company. What is the company, who is the director, what is the net worth, how long they have been there. You can study, even take the balance sheet from the website. You can take the Ministry of Company Affairs, you can take Corporate Affairs, you can take the balance sheet, etc. You can study it and find out, and you can decide. So this is very important. So you can receivables, though it is improving your sales and profitability, you can't take a blind stand. You have to evaluate. Very important. Credit applicant, you have to evaluate is an important step. Please understand this. We cannot afford to burn our fingers by giving it to a wrong person, wrong company. Okay, so many things are taking place in the world, so be very careful. Then again, determining collection policies and methods. What are the collection policies? How are you going to collect it? What are you going to collect? What the methods you are going to approve? What is the legal remedy available? What is the legal recourse available? And then what is the other methods? Negotiation. In bank, we got a one-time settlement. We will negotiate with the customer how much you can pay, like that. Collection policies, and who is going to be employed, who is the trustworthy, we can go and collect it, and they will have to give the daily report, etc. What are the collection methods? So you are going to have some your own employees, or you are going to employ somebody else, etc. These are things will come automatically. So very important. So receivable financing is very important. We have to see all these things before you are giving a credit to a customer, credit sales to a customer. So before we extend credit sales, before we sell to customers on credit basis, you have to keep in mind all these things. So cost is there. It involves a cost, plus there are certain scope, certain procedural things which you have to spell it out before giving a credit sales. So you have to spell out your credit policies, you have to spell out your credit terms, and you have to evaluate the credit applicant thoroughly, and then you have to make a decision. So these are the things. Now we'll have to, well, so there will be two things are there. One is benefit, other is cost. Two things are available, I told you. There's benefits and cost. So these two we have to see. The benefits are more than this cost, then you can give credit. So you have to make some evaluation. So the next thing we'll have to work out some example, and then we will have to find out whether we can extend the credit sales or not. Okay, this is important. Till such time, I hope you have understood what I told you. So till such time, all the best. Thank you.